Hey everyone, welcome back to Corporate Decoder. Today we're cracking open Giftify's latest 10k amendment, and trust me, it's not as exciting as getting a gift you actually want. Think more like that fruitcake your aunt sends every year. We will dig into Giftify's annual report. The big news, Giftify had to file an amended report solely to include their executive compensation clawback policy. And also, they experienced a going concern qualification in their 2024 audit. Think of a clawback policy like a financial oops button for numbers. The company can take that money back. It's a hot topic. And now Giftify is officially playing along. The company is simply including the clawback policy attached to this amendment as an exhibit. This amendment does not reflect events that may have occurred subsequent to the original filing date. So it's as if this amendment never happened. They are still the same company as when the original report was filed. Giftify filed a Form 10KK, which is an amendment to their annual report, to amend their annual report on Form 10K. It's amendment number 1. This is an important requirement under Section 10D of the Securities Exchange Act of 1934 and Nasdaq Listing Rule 5608, requiring every company to set up one of these policies. But there's one more thing here too. The company received a going concern qualification in their 2024 audit, which means their auditors have substantial doubt about the ability for the company to be operating a year from now. Giftify Inc. is a real company with a commission file number 00142206. This report is for the fiscal year ended December 31, 2024. The company is not a well-known seasoned issuer. It is not a large accelerated filer, and it's a smaller reporting company. Giftify is a non-accelerated filer. Now let's dive into what the filing talks about. Giftify owns and operates Restaurant.com, a pioneer in the restaurant deal space. Their profile fundamentally changed with the acquisition of CardCash Exchange Inc. In December 2023, CardCash buys merchant gift cards from the general public and distributors at a discount and then resells them at a markup. So Giftify now is deals on restaurant and discount gift cards, basically a place to save money. In December of 2023, they acquired all the outstanding equity of CardCash for $26 million. This was paid with stock, cash, and notes. They operate with two business divisions, business to consumer B2C and business to business B2B. The B2C focuses on selling certificates to their customer database and dining passes. For the B2B division, they sell to corporations and marketers so they can rewards, increase sales, motivate customer behavior, etc. CardCash is trying to grow their channels to take advantage of the projected expansion to $400 billion by 2026 of the gift card market. They expect that a more efficient use of machine learning transaction processing with richer data can empower it to scale its model to meet the needs of the gift card market. They are focused on maximizing inventory through checkout and branded exchange initiatives. They plan to grow and leverage their customer database of 6.2 million, which they believe is valuable to merchants for other services and products. They have a substantial number of competing groups and buying sites such as Groupon and Entertainment.com. A lot of things are regulated, from the CAT Act, privacy concerns, to just operating a business online, and laws can change and it can be scary. This is what they said about regulation. Government regulation of the internet and e-commerce is evolving, and unfavorable changes or failure by us to comply with these regulations could substantially harm our business and results of operations. That's always something to watch out for. The company protects their intellectual property using laws, trade secrets, copyright, and more. CardCash purchased a patent from E2 Interactive relating to the processing of valuable items such as gift cards by retailers, and CardCash has a registered trademark, so they aren't slacking on protecting their assets. As of December 31, 2024, they had 42 full-time employees. They are a smaller reporting company, so they have simplified executive compensation disclosures in their SEC filings. Time for the scary part of the report, the risk factors. It's always a good idea to see the potential problems that might come up. The very first one is huge. There is substantial doubt about their ability to continue as a going concern. For the year ended December 31, 2024, they recorded a net loss of $18.8 million. Their accounting firm also expressed substantial doubt about their ability to continue as a going concern. There's a risk of reputational damage from merchants. If the restaurants and other merchants do not meet the needs and expectations of their customers, their business could suffer. Government regulations are another big risk. They may be subject to additional unexpected regulation which could increase their costs or otherwise harm our business. They are subject to general economic downturns that may reduce demand for their digital dining products. For example, government consumption or socioeconomic policies could potentially impact the demand for our discount dining certificates and discount dining passes. A big risk for Giftify is their ability to raise capital in the future may be limited, and their failure to raise capital when needed could prevent them from growing. So their success depends on getting more funding. They intend to make acquisitions that could disrupt their operations and adversely impact their business and operating results. In addition, acquisitions also involve other risks, including risks inherent in entering markets in which we have no or limited prior experience and the potential loss of key employees. Their plans for expansion cannot be implemented if they lose their key personnel or cannot recruit additional personnel. Our competitors may directly increase their marketing costs and also may cause them to decrease certain types of marketing. They depend on effective marketing and high customer traffic. If they do not respond to rapid technological changes, their services could become obsolete and they could lose customers. They rely upon search engines like Google, Bing, and Yahoo to rank their product offerings and may at times be subject to changes in search algorithms and ranking penalties if they believe we are not in compliance with their guidelines. They are subject to cybersecurity risks and risks of data loss or other security breaches, which could expose them to a risk of loss or misuse of information. Also, their securities are penny stock and subject to specific rules governing their sale to investors. Generally, brokers may be less willing to execute transactions in securities subject to the penny stock rules. This may make it more difficult for Giftify shareholders to sell shares of their common stock. There is limited recent trading activity in their common stock, and there is no assurance that an active market will develop in the future. Their bylaws designate specific courts as the exclusive forum for certain litigation that may be initiated by their stockholders, which could limit their stockholders' ability to obtain a favorable judicial forum for disputes. If they fail to maintain an effective system of internal controls, they may not be able to accurately report their financial results or detect fraud. The price of their common stock may become volatile, which could lead to losses by investors and costly securities litigation. Investors may experience dilution of their ownership interest because of the future issuance of additional shares of their common stock. Their common stock is controlled by insiders who beneficially own approximately 20% of their outstanding shares of common stock. As a smaller reporting company, they are subject to scale disclosure requirements that may make it more challenging for investors to analyze their results of operations and financial prospects. Here's what they had to say about cybersecurity. They use, store, and process data for and about their customers, employees, partners, and suppliers. They've implemented a cybersecurity risk management program that is designed to identify, assess, and mitigate risks from cybersecurity threats to this data, their systems, and business operations. Their IT manager reports quarterly to the audit committee of the board of directors on the information security program and related cyber risks, and provides an annual update to the board of directors on the company's overall risk management strategy, which includes addressing cybersecurity risks. Although risks from cybersecurity threats have to date not materially affected us, they have from time to time experienced threats to and breaches of their third-party vendors' data and systems. Now let's look at their financials. For the year ended December 31, 2024, they had revenue of $88.9 million and cost of sales $75.8 million, giving them a gross profit of $13.1 million. This is offset by a lot of operation expenses, resulting in a loss from operations of $18.4 million. They have other expenses which result in a net loss of $18.8 million. The consolidated balance sheet says that they had $3.5 million in cash, 91,000 accounts receivable, and $4.1 million in inventory. On the liability side, they have $1.9 million in accounts payable and $3.8 million on their secured line of credit. Their cash flow doesn't look good either, as they use $2.5 million in operating activities. No cash from investing activities, with cash provided by financing activities of $2 million. On August 6, 2024, the Nasdaq stock market granted our application for listing on the Nasdaq. They included a couple of exhibits, with the big one, as they stated in the beginning, the executive compensation clawback policy. All in all, this amendment was filed because they are now required to create this clawback policy. Now, what's my take on all of this? Giftify has a tough road ahead. They are trying to navigate a competitive market with limited resources, as it is a smaller reporting company. Their high debt combined with their going concern status is not a good sign. They need to really prove that their card cash acquisition can turn a profit to get themselves on sound footing. To their reliance on key personnel and external factors like economic conditions is a point of weakness. On the plus side, their stock price may go up, which would make raising future financing easier. But for now, it may require significant interest from them to operate ICs. Right now, it's a high-risk situation, and the report spells it out pretty clearly. Thanks for tuning in. Remember to do your own research and see if Giftify is something you want to invest in. Make sure you are also aware of the risk factors. Please give us a like, comment, and subscribe.